This panel is going to be called I Want to File a Claim, and it's going to be about mining insurance. All right.
Thank you. Really appreciate everybody being here today. Mining Disrupt 2022. I have the esteemed job of talking about our favorite topic in the world, insurance. Yeah, exactly. When you're dealing with an industry that's as capital intensive as digital mining, insurance actually does make a huge amount of difference on volatility, on risk, on operations. So we've got a fantastic panel. I'd like to invite them all up. So we're going to be going for about 2.5 hours covering insurance from A to Z. But we'll get the panelists to introduce themselves. You want to start from the left? I think they should be on.
Testing? Nope. Hello? Okay.
Hello.
There you go. All right. We'll start with
Alex Jelenevsky, Navigator Risk. We're risk management consultants.
Dan Dilella, Hotaling Insurance Services. We're an independent insurance broker.
Blaine at Marsh, McLennan Agency, insurance broker.
Tom Shewchuck, co-founder, president of Bitsure. We insure crypto miners.
All right. Well, let's kick it off with this riveting lecture about insurance.
Really teeing us up there, babe.
Yeah, seriously. So, all mining centers or data centers are not identical. How do you guys compare apples to oranges when you're doing risk premium analysis? How do you look at risk? And what does your team think of longer term durations versus shorter term durations on risk policies themselves?
Yeah, that is a perfect Tom question.
I'll take that one. Yeah, that's fine. So, when we were getting into the space and trying to build out our products, what we found was obviously there's no data that exists right now to quantify what is good risk and what is bad risk. So what we did was we've been mining since 2019, so we kind of drew upon our own experience. And then additionally, we've been around to a lot of different farms. We have a repair business. So we have a really good understanding of how crypto miners, specifically ASICs, they fail, different pain points and exposures of the actual operations. And so, we look at traditional risk management, where a facility is located in geographic distance to like a fire station, things like that. Those are just normal things you can extrapolate from traditional insurance products. And then basically you have to draw upon, your own specific experiences. So specifically, we like immersion, mostly because the fire risk is lower. Right. You get less fail rate with the equipment, typically. And then with ambient air facilities, if it's a containerized solution, we like that too because it's more diversified. We qualify each different container as its own location. So if there is a fire, it's really just, in just one container, it's not going to spread to the other ones. And then additionally, if it's all under one roof, that becomes more of a challenge because of the aggregate of risk. But in most of those situations, we just like, if you've got central station fire alarms, 24/7 security, all these aren't mandatory. But if you're actively making sure that you're mitigating the risk for your clients, which most colos do, obviously, because they want to make sure their clients are 100% uptime or pretty close to that. Yeah. There's a lot of just synergies between what our products do and how we insure the risk versus how the actual site managers are mitigating the risk. It's not a great answer because there's nothing really definitive out there right now, but we're gathering that data actively, and we work with different colos and hosting companies as they build out their own facilities and how to best protect their clients' machines. And so there's a lot of different ways we can do that, but generally speaking, we apply what we know now to the existing situations and then kind of see how it goes.
Got it. And what about containers versus buildings? Is there a difference on how you review them? Is there a difference on the analysis that your team actually undertakes on it?
Yeah, so with containers, it's really you have off-grid situations, or if you're, I'll take like a Compute North, they've got very large facilities. We like to see gated facilities around the entire site. And then adequate spacing between all the containers. Our minimum per our reinsurance contracts, where we can really put up larger limits for the entire site, would be like 25 feet apart on all sides for the containers. That mitigates a lot of the fire risk and fire bridging that we see, as well as like power arcing from the transformers if something were to blow. And then with individual like buildings or commercial buildings, really it's all about access to the site, who can get in and out, Sometimes machines, sprout legs and they can walk away. So we don't like to see those situations.
Yes.
Yep. But really, I think most players in the space today, specifically colos, they're doing a really good job of mitigating that risk, because the last thing they want is to have, some sort of situation happen where they're negligent and then their client loses money, and in turn they lose money, right? So from a diversification standpoint, and then putting up larger limits of coverage, we prefer container solutions, but that's mostly just because the aggregate risk is diversified and spread around. It's harder to do individual commercial buildings.
Well, and I think it's like anything else, right? Like if you have a poor setup in a container versus a building where it's done correctly, you're going to look at the individual like plumbing of the situation. Right. So if you have quality in, quality comes out. If you put shit in, shit comes out. And I think that's the important part.
Let's unpack that a little bit. How do you assess quality? Do you guys have your own engineering teams or technical teams that can actually go and do a site inspection, do an assessment, then provide you a report?
Yeah, so that's definitely something that will happen at the carrier level as well as our field team. That's something that like Alex and his team does at Risk Navigator for us as well. So coming on, documenting the pictures, taking the videography, understanding really what they're doing. So when it's immersion, what kind of fluids are we using? What's the fail safes that go into that? If we're using air filtration, what are we doing to mitigate dust and things of those natures? So really kind of getting that fine tuning of what's happening on each site, but also documenting it, because insurance carriers, it's kind of surprising, but they don't love paying claims. And the vaguer things are in a contract, the more they're just going to screw you. So by having things that are truly documented, by understanding, and like folks like Bitsure that like actually understand how a mine works, they don't just like, want to collect insurance premium and then not pay you. They really do the good job of documenting it. So when it says, hey, you said X, we covered Y, if we have a claim, we're going to pay Z. What happens is like insurance broker says X, they document something completely different, and then they're not going to pay a claim when it comes about because it wasn't documented properly and they didn't understand it. So that's really kind of the crux of it, is being transparent with a broker, because for us, we're all independent. So we love to use carriers like Bitsure. We use other folks out there, but it really kind of helps keep people honest, because that way not one party's making the market and can set terms. You're really able to kind of say, hey, here's what each different vertical offers. One carrier might be great at one line of insurance, one carrier might be great at the other, but it's kind of combining them all to represent the client and get them the best deal possible.
And I'll just jump in here for one quick second. And it's just controlling what you can control. So a lot of things on the insurance side, right? Like Tom's company is actually placing coverage, and Dan, they're actually marketing the coverage, but like understanding the factors that you can control and influence how your coverage will be or how a claim would be handled. And a great example of that would be hosting. In a hosting scenario, the carrier's in a really tough spot because, you're hosting someone else's machine and you don't necessarily own it. And you have this whole dynamic about, well, who's in charge and who can buy the insurance. But a lot of that can be addressed through things that you can have inside your business and through your business model, contracts, et cetera. But most people don't understand that. So they come and they say, hey, I want to get coverage, and these folks are working on it. And then at the end of the day, it's like, oh, I can't get you coverage or what you need. And it has nothing to do with the carrier or the broker, but really about stuff that happened on your side of the table and you just didn't know. So understanding how to structure your hosting agreements and your contracts can really drive how to get coverage more affordably, and make sure that you are covered in the event of an event.
One of the other pieces, and Dan brought it up, the transparency and being honest in what you're doing. We've all had the experience of talking to people who say, oh, I have coverage, and they're from a great carrier who's online. I went online, I got my rate today, and I just said it was a bunch of computers. And I pay a low premium, and my hosting facility took it, and it was good to go. And then they get upset when they file a claim and the word Bitcoin or crypto comes up and the carrier walks away. So I'd encourage a lot of folks, we were chatting about this last week, if you're insured by somebody you've seen a commercial for when you're watching your football game or the TV, they probably don't know and they aren't actually covering what you think they're covering. And that's why the transparency and the details are incredibly important.
So this leads to the next question. I remember when I first started at Core a few years ago, it was impossible to get high quality insurance coverage, even though we had several hundred megawatts under operation at that time. The insurance companies, as soon as they heard Bitcoin, eyes glaze over. They have no idea. We worked hard. We worked our asses off to actually find good insurance. And then we maxed it out and we had to find a new insurance company. But let's talk about the competitive landscape, because now there seems to be some high quality offerings out there. So as advice for the folks listening to this panel, either here or at home later on, what would you recommend for them to do to find that right insurance partner to make sure that they are covered?
So I would say on something like this, kind of like what Dan said, I think a lot of the carriers out there that if you see their names and they run TV commercials, they're probably not offering the best programs. I think it comes down to having a broker that actually understands what you guys are doing. So if you tell them what your operation is and they go, okay, great, I'll go do it. Ask them, what do you know about mining? What do you know about Bitcoin? Because remember, their job is to represent you to the insurance carrier. So if they don't know anything about anything, how are they going to represent you when those questions come across? All that they want to do is they want to show up at your dinner table, eat your food, not help you with the dishes after. So AKA collect premium, get a commission, then when you call, go, sorry, it was Bitcoin mining. They didn't get it. Well, that's because the insurance carriers are run by 78-year-old dinosaurs. They have no clue what's happening. So somebody needs to actually educate them on what's going on, and that's the job of a broker. Make them earn their money, and then they'll help find the competitive landscapes like the Bitsures of the world that understand what they're doing, and then they'll do a fair job representing you to that market.
I can't confirm I'm not 78, so there's that. But thank you.
You're one of the good ones.
Yeah,
that's why I gave you the
that.
props.
Yeah, I appreciate that. No, to piggyback on what Dan said, though, it is imperative, I think, that everybody uses a broker that understands what it is that you're doing so that they can articulate that risk to the carrier. Now, that's why we partner with people like Dan from Hotaling, and then Marsh and some other shops like NFP, and then IMA and USI, is because they understand the risk because they've had, experience doing all that. But ultimately, when we're having submissions from other agents that are saying, hey, would you mind jumping on a call with the insured because I have no idea what I'm doing, I'm happy to do that, but at the same time, it's much easier for us to streamline our underwriting processes if we're using and dealing with some agent or broker that understands what it is that's already happening. But there's always an education process. We're unique, obviously, because we're targeting the space, but most underwriters in this space, they'll tell you that, oh yeah, we know what this is. They have a pretty good idea, but I would say their contracts aren't tailored exactly to the space like ours are. And, back to what we were saying before is that if there is a claim situation, you want to make sure that in that situation you're going to get covered. We have very specific language in our contract that assesses essentially exactly what it is that you're doing at the operational level, and it's very cut and dry as to what is and is not covered. It's all in black and white, and there's no ambiguity, and we were very, very measured in that approach when we were building the products over the last 2 years, because it took us 2 years to get everything to market. That's how slow everything moves in the insurance space, because again, these companies are run by people that are 78 years old. Nothing against that. It's just that they're not the best quick adopters to emerging technologies or risk.
No, that makes sense. So let's talk about premiums. Good,
Ooh,
the good, the bad, the
favorite.
ugly. How do you guys assess premiums based on scale, operational complexity, and if you're a miner, with a 10 megawatt, 25, 100 megawatt site, what do you think you should be looking at on a dollar per, $1 million coverage for that facility?
Yeah, I'll take that one too. Sorry to hijack this whole thing, guys. Sorry.
It's okay.
Yeah.
You're the one with the glasses. You're smarter.
I appreciate that. Thank you. Yeah.
I left mine at home.
So premiums are really dependent on, I would say, the individual client's risk and then the hosting facility. I mean, if you're vertically integrated, you have your own facility, or you're at a hosting site, you're truly in control as to what it is that you're going to pay, because we look at hundreds of variables in our algorithmic rating process. So we look at things down to, who has access to the site? Do you have 24/7 security? Are you running liquid immersions in ambient air? Is it off grid? Are you on grid? Where are you deriving the energy from? Is it containerized? There's a million different things. And then you couple that with, all right, the higher the limits of coverage you're getting, the more you're going to pay. Obviously, that's linear. And then if you have a deductible that you want it to be higher, if you just want to treat it like a catastrophic policy, which we think is a good way to mitigate risk and cost, then obviously you'll pay a lower premium. Generally speaking, though, just from base rates, we're right around anywhere between 0.5% rate on line and 2.5% rate on line, and that really just depends on what is the risk that we're underwriting. So that would mean that if you're insuring $1 million worth of coverage, you're going to pay anywhere between $5,000 and $25,000 a year, essentially. So that's kind of like the bandwidth, but on the higher end of that, that's more like off-grid situations, oil and gas extraction sites where you're not close to a fire station, anything like that, where it's more of a risky endeavor, as opposed to if you're at a colo site like a Core Scientific, Compute North, and you've got really good risk mitigation tools in place.
And I would say, just like being on the broker side of things, seeing it as an industry average across the board, it's probably in like the 1% to 3% is what we've seen from, if we're just kind of clumping everyone together, with Bitsure really kind of being on the better end of the pricing spectrum. And then as Tom said, it's important to understand what you're doing, whether it's 24/7 security, whether it's cameras, the different features and different things that you could do, where I'm investing, 50 cents today to save me $1 over a 3-year period. And it's just really making it a math problem.
Yeah, no, I hear you. So, fact pattern. You set up a 10 megawatt site, and for some reason the hillbillies down the street come down and destroy the facility. How long does it typically take for the claim process to actually work out?
Well,
That's definitely a carrier question. I
Yeah,
gotta say.
that is.
I can help you a lot, but it's going to be a carrier question.
That would depend on who's insuring it. If it's us, I would like to think that we're going to take about 2 to 6 weeks, depending on the damage, to actually assess and make a full payment on the total loss settlement. Generally speaking, you'll get a check right away. Just to cover the initial cost is like what we estimate. So we'll say, hey, if we think the damage is $100,000, obviously the deductible will come into play there. So let's just assume there's no deductible in that situation. We would probably cut a check for anywhere between $25,000, $50,000 right away. Once we've assessed the damage, put a valuation on it, then what we would do is our TPA claims service, by the way, does all that for us. There's an inherent need for that, simply because we're the underwriters, but we also don't want the conflict of interest of settling the claims. That's just not good for the client or the brokers in those situations. So by design, we have a TPA service that we outsource that to, that they do everything, and we don't pay for that. They take a percentage of the premium, so our interests are aligned there, or rather their interests are aligned with the client, so they're not beholden to what we say. They actually, in the contract, it says we don't get to influence the claims process. So really, it's a third-party administrator that does it, and in the most situations that we see claims, I would say that there is a TPA involved, but I would say anywhere between 2 and 6 weeks, but you'll get payment pretty quickly initially, and then for the final payment where we want to bridge that gap with the additional payment, it really just depends on how quickly we're able to get out there and assess everything that happened and make sure that it was a covered loss event. But in that specific situation, that's vandalism, that's definitely covered on our contract.
Thanks.
I think something to add there is, as you're interviewing your brokers and talking to whoever's put you in a policy or is about to put you in a policy, while the claim is the carrier's duty to pay, ideally, ask your broker as you're interviewing them. Well, do you guys have a claims team? Am I going to get support from you all when this bad thing happens to help me translate the insurance speak that Tom and his team are going to throw at us, and help walk me through it and be our advocate? That's another kind of key differentiator to picking who's going to support you in the marketplace.
Yeah, I couldn't agree more. A simple way to think about that is kind of like, you don't know if you have a good accountant until you get audited. You really don't know if you have a good insurance broker until you have a claim and you see how they help you. So I always think that's really the true test, is how willing they're willing to get in the mud with you. Because remember, when you're filing a claim, they've already made their money. So now you get to see if they truly are aligned with you, or if they just gave you some lip service to get a check.
No, that's great. And it leads into the next question. This is for the entire panel. What are some common misconceptions that you see in the marketplace today, and how can miners actually address them before they come to you for insurance or for a claim?
Alex, you take it, because we've been bogarting this.
I would say that the biggest misconception is just not a lack of understanding of how to actually value what you need to insure, and understanding how much of it you want to self-insure. I mean, a lot of the industry kind of self-insures and is late to the party in actually buying insurance, and then understanding that if you are self-insuring now, that means you've got zero support, right? So there's got to be a difference between zero support and full support. And maybe there's not a good relationship between completely offloading all the risk, so to speak, to an insurance carrier, because maybe there's not enough value there for you, right? Your money's is worth more in other places or working for you. But understanding that it's not a zero, it's not a 0 or 60 game, so to speak. You know what I mean? There's a middle ground, and you can set that through some of the custom programs out there, or even some of the customization that Bitsure allows, and working with things that where you don't have to, convert your money into USD in order to be able to, pay for insurance or set aside to pay claims or whatever it is. It really can be a very customized process, but the bigger picture is understanding there is a big difference between completely self-insured and no support and being fully insured, and there are middle grounds, and the carriers will work with you as long as you have the sophistication and the systems and process. So I think that's probably the biggest misconception, is just people just don't insure themselves because they don't understand why they would want to come and play. And I had a conversation with somebody today basically saying, hey, what wouldn't be covered under this policy? And it's like, well, every policy is an individually negotiated contract. And like any other contract, a hosting agreement, anything else, a lease, it's negotiable. So when you go in there and if you don't actually read the policy, if you don't have a broker who's actually reading terms, conditions, endorsements, et cetera, then you don't actually know what's being excluded. Or, maybe you're excluding flood, but maybe you don't actually know what flood is. And maybe you need to get some understanding behind that. Maybe you're not in a flood zone, but maybe you've got other exposures that would be considered a flood and therefore would be excluded because we never addressed it. So it's just educating yourself. Like anything else that you've ever purchased, measure twice and cut once, so to speak.
Yeah, I was told the panel shouldn't go an hour, so I'm just going to pass this one.
Well said. We can keep it moving.
I'm good.
All right, list is getting
We're
pretty short.
like the White House press secretary.
Yeah, seriously. Single word responses are fine. What types of losses claims are most likely to be paid out by a crypto mining property insurance policy?
That's definitely a carrier question.
I would say fire, theft, vandalism, wind events. You get a snowstorm that comes in. Can potentially get snow into a container, wipe out, a couple hundred machines. Those situations, those are really the main ones I would say that we've seen. I'd open up to anybody else if you guys have seen
I would
any
also
unique
say
situations.
cyber.
Yeah, cyber. Yeah, that's
Cyber.
Yeah.
If somebody comes in and basically crypto jacks any of the machines, sending them to a nefarious wallet, something along those lines. That's one of the things that we think is going to be important for folks to really kind of consider moving forward, because you just see so many phishing attempts in today's day and age, and you've got the bigger publicly traded miners that they have their own teams involved that they do daily phishing scams every day. Well, not every group has that ability. So there are certain systems and companies out there that will do daily tests to make sure that your wallets are your wallets, they're going to the right spot. And that gets particularly, problematic, especially if you're hosting, because you are sending these, you have other people's machines on your site, sending out to different wallets out there. You got to make sure it's being accountable. But then it's if you're the site, are you accountable, or is it the individual that's accountable? So you really want to make sure you define those terms, or else it's going to become a problem later, and that's just what you want to get ahead of.
The other one to add along with cyber is D&O, which the two hottest things in insurance, the two hottest things in insurance right now in any of our clients. But certainly all the publics have it, right? All the large public mining companies we know have it because they have to. But we're seeing plenty of the good-sized privates as well, because you're hosting how many clients? One of those clients decides to sue you for a lot of money. Are you and your shareholders or your board protected? And that's what that policy would do. So I'd say that as well.
So I've heard of a business interruption insurance, but have you guys ever considered power interruption insurance? I mean, you're a large-scale miner. You're relying on the grid to be connected. What happens when the grid goes down and you're basically out of business? Have you guys ever considered that type of insurance policy?
No, because it's really hard to model that. Also, it differs geographically, right? So like Texas has its own problems. Honestly, like I would say in most situations, there really isn't an issue depending on how sound the grid is. What we've seen is those types of situations occur more frequently in like the Texas areas or off-grid sites. But again, those are, I would say, more nascent issues that occur in the market. And right now, what we're seeing right now, it's an emerging market, right, from an insurance standpoint. So it would be very difficult for us to even assign a premium. I can tell you that if we did do it, it would be expensive, and I don't know that many people would buy it. So.
Well, and I think the other thing too is like, you think what are the scenarios where the power gets shut down versus a voluntary ask of turning down the jets, right? So I think in the way that a lot of miners have been self-insuring is when they're negotiating their power deals, they're setting it up in a way that they could sell energy back to the grid. So it's kind of like a model of self-insuring where if you're doing this the right way and you have the right energy broker with you, they can really set up a structure that you can still maintain profits and sometimes do a better deal when the grid is saying, hey, we have a higher power demand, we need you to slow things down a little bit or shut down. You're selling that energy cost back to the grid if you have a good negotiated contract.
No, that makes sense. Are there any interesting stories within the insurance space that you've encountered within the Bitcoin mining sector that you can share with the audience?
Did you just say an interesting insurance story?
Oh, did I?
That's like, that doesn't even make sense.
I guess that's a no from you.
I do. I would say 9 months ago, we were working on a project, and I realized how stressed this industry was in terms of getting coverage, and I basically said to myself, it really shouldn't be that difficult, right? And it's probably how Tom saw the challenge as well when he was putting it together. It's like, well, we understand these risks. These risks in their own silos have all worked together. And, Dan and I, in that particular case, hopped on the call, and we broke apart the risk factors. It was like, all right, cool. Now we have to go tell the insurance companies how they're going to do this. And we embarked on that journey, and that was, as Bitsure's doing their thing and creating a great product for this industry. There's a zillion other carriers who want to be in the space that just they don't have the education, right? And so trying to explain how you break apart the risk factors to the insurance markets, it was a hell of a story. But I basically sat there and I said, it really shouldn't be that difficult. And I imagine that most people, hearing this are sitting there saying like, yeah, it really shouldn't be, right? I mean, it's freaking insurance. But at the end of the day, insurance companies, as Tom alluded to, they're slow to the gate. It's a zero-sum game for them, right? They're only going to write it if they're going to make money, and if there's any gray area, they're stepping back. And I used this expression yesterday, and I use it regularly. To me, it reminds me very much of cannabis. And it was, everybody ran away from it, turned their back on it, and now almost every insurance company has a cannabis product, a program, everything else. And so, we're in a time frame right now where this industry is developing. I would say you're probably looking at 3 to 5 years, and you're going to see a very different landscape here. But at the same time, how does this industry build if it doesn't have this kind of protection? And so that's ultimately what everybody here is doing, is they're looking outside the box to solve solutions. But that to me was an aha moment, because I'm sitting there going, like, it really shouldn't be that difficult. How do you go to the insurance companies and tell them how to do what they do?
No, that's awesome. I mean, you really do see this industry evolving and professionalizing. This event is, case in point. From a few hundred people 3-4 years ago to the amazing amount of people we have here, the exhibitors, the amount of capital that we represent here, it really does show that the industry is performing as it should, and we're not going anywhere. I mean, there is some regulatory overhang right now in the United States, but I don't think it's going to blow out the industry at all. We really do represent a strong economic case for what's happening in North America, and I think that we have a lot of room to grow at this point. So I appreciate the time you guys took for being part of the panel, and hopefully everybody enjoys the rest of the conference.